One way we can think of these different colors, you may have your own way of remembering them, but for me, the white being the end of a downturn is kind of like seeing light at the end of the tunnel. So you can see the white light at the end of the tunnel. It means the end of the downturn, and a possible indicator that things could turn up. At least it's kind of a juncture. So white meaning light at the end of the tunnel. Yellow being the initial rise, like the rising sun, the prospects looking sunnier or sun shining bright is the yellow, the initial rising phase. Green, so green light, go, all systems go. Green is the best color pattern. Then we have red. Red is like a red light signaling a warning to take caution. In this case, as we discussed before, we're in an overall uptrend, so this red was more of a temporary pullback or correction, and it was again followed by green, the strongest rising pattern. However, again we've got red, so time to take caution, red light signal. Blue, this indicates a rapid cooling off, i.e. rapid downturn. So just think of like blue ice cooling off very quickly. And black, or grey in this case. Black is the worst chart color pattern. So this is when you are definitely in a downward zone. And we can add the 75-day shadow again. So again, the three uptrending colors are white for light at the end of the tunnel, yellow for the rising sun, prospects looking shinier or sunnier, and green, all systems go, like a green light. Red is like a warning signal, blue is cooling off rapidly, and black is the worst. From an investment perspective, in terms of determining entry points and exit points, it would have been good to be able to buy while this rising phase was in the early days, so buying cheaply in the initial rise phase, the yellow phase, where the prospects look sunnier, hence yellow. That's just my interpretation, my way of remembering the colors. And once we're into the green zone, all systems go, that's when we have a rapid maturity of the share price, so it's going up and up and up. And obviously you want to buy as early in the uptrend as possible, and you do not want to buy up here because you will have already missed most of the rise. However, in this context it's like a big dip, a correction in the context of a larger uptrend, as we can see here. So perhaps if you had bought around here, it's still probably a little bit risky given the blue nature. As we say, red is the buy zone, blue is the sell zone, so probably not best to buy here. Wait till we've confirmed again the sorry, pink, I said red, excuse me. Pink is the buy zone here, so again we would wait for confirmation that we're in the pink zone for buying, and all systems go again. We have a rapid rise in the share price all the way up to here. Now again, red does not always signify that we're going to be in a massive downtrend quickly. It's just the warning signal, but we should take caution. Once we get into the blue rapid cooling stage, this would be a good time to take profits to close out the position if we had not already done so, using our knowledge of other Masuda Ashi chart rules, such as the bearish reversal and so on, or the harami patterns, looking at the 3-day shadows here. And if we had left it too late, and when we were in the black already, not black as in the black as in profits, but in the black zone, which is the worst chart pattern here, then we've only got ourselves to blame really. We had plenty of opportunity to get out earlier. On the other hand, if you are short selling, you can look at the red signal as a potential entry timing zone to watch out for, and once you got to blue, that would be a good indication that the trend is definitely heading down. So from a short selling perspective, these are good colored downtrending patterns. So it depends on your perspective, but in general, when we're talking about taking long positions, the uptrending colors are the white for light at the end of the tunnel, yellow for sunnier prospects, and green for all systems go. Red for the red, blue, and black or grey on the screen for the downtrending color patterns. Red meaning a warning signal, blue meaning rapid cooling off, and black being the worst. That is all for this lesson. In the next lesson, which will be lesson number 16, we will go into more detail about how we come about defining the white, yellow, green, red, blue, and black patterns based on the relative positioning of each of the short, medium, and long-term real body MASUDA ASI lines. As a quick preview, you can see this table. We have uptrending patterns as we discussed. We have the white, yellow, and green patterns, and each of these also have an alphabet letter assigned to them, F, A, B. Some people might ask, why doesn't this start with the A, B, C? But that is not really of that much importance. Just remember FAB. Sometimes people say, for Roger, okay, all systems go, you can just think of FAB like fab, fabulous, uptrending, FAB. White, yellow, green, white being light at the end of the tunnel, yellow being sunnier prospects, and green being all systems go. And we have downtrending patterns C, D, and E, red being the C for warning signal, blue being rapid cooling off, and black being the worst pattern. And as we'll discuss in the next lesson in more detail, these patterns and these colors are defined based on the relative positioning of each of the short, medium, and long-term lines. The best pattern, the green pattern here, the B pattern, is when the short-term line is above the medium-term line is above the long-term line, and the worst pattern is the reverse, when the short-term line is below the medium-term line is below the long-term line. So you can pause the video if you like and take a look at this in more detail, but we will discuss this in lesson 16. Thank you for listening this far. Goodbye.